was held on to even yesterday, though not by much, but it was still held on to. And, that gives me the confidence, and also the fact that, the heaviest of them all, the heavyweight stock HDFC Bank, continues to consolidate with a positive bias. And as long as that even remains sideways, I think, some of the other stocks can pull their weight, and Bank Nifty can head higher. So as long as 51,000 is held, I think a long trade on Bank Nifty is warranted. On the upside, you're looking at 52,200. Now there is those are the levels where a couple of averages are converging. So you could see some resistance, but once that is taken out, the 52,800 is also on the cards. So fairly bullish on Bank Nifty. And if you allow me, I'll take a quick 30-second on Nifty as well. We're not out of the woods yet. We're giving up, a lot of the gains that we saw yesterday, today also consolidating with a negative bias. But a couple of data points are starting to perhaps turn mildly positive. Not enough to give you a long trade, but starting to turn positive, which is that on the hourly chart, we are seeing a positive divergence. And for the monthly expiry, which is next week, there is still a good put option base around the 24,500, 24,400 mark, which is suggesting that the bears from here on are perhaps not seeing as big a downside. However, as I said, not strong enough to give a trade, but if you're looking for green shoots and being optimistic, there are a couple.
All right. Well, with that, let's take a look at stocks which are on our experts' radar. So, Rajesh, ideas that are looking interesting to you this afternoon?
So, Agam, first stock is on the long side. That is Indigo Pants. After a long consolidation of almost 10 to 12 week, stock managed to give breakout on the weekly chart. Looking at the near-term, short-term structure, stock is very well placed above all its near-term, short-term moving averages. Looking at the strength in the counter and the breakout on the technical charts, we believe that here there is a potential to continue furthermore upside. Possible target we are expecting towards 1730 for short term. One can buy with stop loss of 1635. The stock where we are focusing on the short side, that is SBI Life. This is the fourth consecutive week where stock is making lower high-low formation. That clearly showing that sustained supply pressure in the stock. And this process, stock is now slipped below to near-term moving averages like 50-day, 20-day moving average, which is also adding up the furthermore weakness in the stock. Short built-up is there in the data on the derivative side. So we believe that SBI Life can be looked at to short at the current juncture. Possible target on the downside towards 1585 we can see in the near-term perspective. One can go short with stop loss of 1665.
All right, Kush, before I come to you, I'll quickly mark Adani Wilmar numbers are out and revenue is up by around 18%. Looks like a good set of numbers. Net profit is also standing at 311 crores versus a loss of 131 crores YOY. We'll wait for more numbers to flash up, and we'll wait as to what margins are done, because Agam, we've seen that a lot of FMCG companies have taken a hit in terms of margins on the back of raw material price inflation. Right. So that is something that is, that will be on the watch out for every FMCG company. But that's Adani Wilmar, revenue up 18%, a significant jump in terms of net profit from a loss of 131
I guess in this case, you'll probably have the benefit of operating leverage play out, because we're looking at an 18% growth in revenue. And to a certain extent, because Adani Wilmar is into edible oils, the pricing environment matters a lot. So I reckon a lot of these factors have played in favor of the company, and that's possibly the reason why we're looking at a strong quarter coming in. Of course, the stock has also reacted with a very strong spike in the share price.
Absolutely. I mean, it's not every day that a FMCG comes up with a double-digit growth.
Right.
So a good set of numbers for Adani Wilmar. But moving on, Kush, I'll come to you. Your topics for the day.
Well, sure. Like Rajesh, I also have a mix of a long and a short idea. The long idea is on Tube Investments. The stock has had a good run for the last couple of days. Today, it's a bit soft, come off the highs. But if you see the overall structure, it's fairly bullish. And then the volumes have also seen a pickup over the last couple of trading sessions. So from a positional standpoint, Tube Investments is a decent buy at the current levels. 48, 50, 50, 50 are your targets. 44, 40 is where you place your stop loss. On the short side, there is Biocon. We've discussed this in the past, as a short candidate for a target of 335, 325. Those targets were hit, but even now, as you see, the stock is reeling under pressure and trading down by about nearly about 1%. The 200-day moving average support comes in at around 310 odd levels. So, up until then, there's still room on the downside. Your targets will be 317 and 313, and your stop losses at 327.
All right, there you have it. Well, one long and one short from Kush's side as well. But with that, we put the spotlight on a very interesting theme of the day, and that is pharmaceuticals specifically. And, well, we've seen some very sharp moves in today's day of trade. We, in fact, do have a lot of these counters in the sector also advance, many of which on the back of earnings too. And while the earnings may have been mixed, it is the outlook largely is what we're seeing. And well, we're seeing a positive pan out, a positive read-through for several of these counters. But let's get in my colleague Varsha to tell us about how things have fared for a handful of these names which have announced earnings. Varsha, good afternoon. What do you have for us?
Well, Agam, I have three companies, one from hospital segment, one from pharma, and the third one from chemical. Let's start with the hospital one, that is Aster DM Healthcare, which had a good Q2 FY25 number, wherein you can see the numbers. Let's just see the qualitative lines for that. While the Aster DM's revenue was actually slightly better than expectation, but what stood out was the net profit. The EBITDA and EBITDA margin were actually beat by a fair margin. Now, the average occupied per bed has increased to 43,000 from 38,700 from last year, while occupancy levels stood at 72% from 70% last year. Now, if you see the key highlights for the company, they have actually installed 100 beds at Kannur, and they plan to add 1,800 beds by FY27, including new addition of Aster Women and Child Care. Now, if you see, we do have a con call highlights wherein what management is expecting. One is the ARPOB, so average revenue per occupied bed has increased 12% in H1 FY25. They are actually confident to sustain the growth that they've been showing, and they're going to add 1,800 beds, for which the capex is estimated around 1,450 crore. Still good scope of increase in ARPOB, that is average revenue per occupied bed by 7 to 8%, and margin can go to 20% in AP and Telangana. And overall, they are expecting good margin expansion to continue for the next 3 years, 2 to 3 years. Then we have Piramal Pharma, wherein if you see, the profit is actually up 4.5x, but it did still missed estimates. But what interesting is the margin. So if you see the numbers, revenue was up 17%, EBITDA was up 29%. But if you see the margins were 15.2% versus 13.9% last year, while the estimate were around 13%. So good beat on margins, and net profit up was 4.6 times. This is the key highlights. The revenue growth was actually led by the CDMO business, that is contract development and management organization, which actually grew 24%, which forms 59% for the Piramal. Now, their complex hospital generics grew 9%, which form almost 29% to the sales. Now, the EBITDA margin expansion that we are seeing is actually led by lower employee costs and lower other expenses, and which was actually pretty much offset by gross margin. If you see the third metric which led to this EBITDA growth was good operating leverage and cost optimization initiatives by the company, and a superior revenue mix. The CDMO factor is actually the interesting one, which is actually leading to the revenue growth and margin growth that we have seen. PAT, which was up 4x, was led by higher operating profitability, then higher other income and lower effective tax rate. Now, lastly, we have Navin Fluorine. If you see the numbers were actually in line or kind of weak set of numbers, but what stood out to investors was actually the con call commentary. Now, just to speak about the numbers, revenue was up almost 10%, EBITDA was 9%, and margins were actually down 10 basis points, and net profit was down 2.9%. Now, the revenue growth was led by higher R32 and R22 sales. So these are the refrigerant gases which you use in your ACs, and also there was lower contribution from specialty chemical, because we are seeing the pressure that in the chemical segment as a whole. Now, there was also improved contribution from CDMO business, which led to the revenue growth that we are seeing. Now, EBITDA was actually in line with the estimates, with margin at 21%. Sequentially, if you see, margin have increased due to higher capacity utilization that we are seeing, and actually Navin can make an EBITDA of almost 25% by the FY25. Now, the con call highlights what stood out to investors, why we are seeing the buzz in the stock is the management has an order visibility in specialty chemical from Q3 onwards, and they're maintaining the CDMO guidance of $100 million of revenue by FY27, and the dedicated agro specialty block is expected to be online by November 24. Now, near term actually pain still persists for all chemical companies including Navin, but recovery should be faster for Navin versus the other peers because of the innovative products that they have and the strong innovator revenue that they make out of the business. And lastly, if you see the CDMO and specialty chemical visibility is actually encouraging from H2 FY25.
Right, Varsha, thank you so much for giving us those details on the entire pharma sector. But with that, let's welcome in Dharmesh Kant, who's the head of equity research at Chola Securities, who joins us now. Welcome to the show, Dharmesh. I'll come to you with the entire pharma pack. Any views on all of these three companies, that is Aster DM, Navin Fluorine and Piramal Pharma?
Yeah, good afternoon. Not a specific view. I mean, pharma, we are neutral on the space, but we do have a buy rating on Narayana Hrudayalaya. So that's a hospital chain where we are looking forward to, and it's very cheap compared to its peer, almost half the valuation multiple it is trading at, and with the capacity expansion they have taken in the Cayman Island, which contributes almost 60% to its profitability. We think going forward, this quarter may be a slightly muted, but if you look at on a whole year, say FY26 onward, the margins are likely to improve, and there would be 25% kind of a profit growth for the next 3 years. They have done some debottlenecking in the hospital chain, the Calcutta and Bangalore, so 200 beds around will come out there as well. And then the competitive space, much has been talked about the insurance business, the health insurance part. I think it's a zero-sum game as of now. They are running a pilot in Bangalore, but eventually, if that turns out to be profitable, it looks very good. So there we have a buy, and a long-term target for that company is 2100 on a stock price basis. Other than that, I mean, pharma plays will be more of a consistent kind of a profitability growth of 10-15%, nothing alarming out there. And in this market situation, when things are falling aggressively, this is a heaven where one can place a bet for a safety cushion.
So, well, with that, we want to talk about the IT space just a little bit more, because today what we're seeing is some very, very sharp gashes in names like Birlasoft and KPIT Tech. KPIT Tech is a technology company, there's no doubt about that, but well, what's happening here is that it actually caters to a very specific segment in the auto space. It's taking a knock of around 13%. While it did start off with a lot of weakness, the start of the day with a lot of weakness, it seems like it's just been continually being sold into at the moment. And a lot of that has to do with the weakness that we've seen as far as the, well, the management is concerned with respect to the outlook. Birlasoft is the other one. That one is also down around 4.5% right now. Just yesterday, we had significant strength in names like Coforge and Persistent Systems. And well, in today's day of trade, we're looking at further gains in Coforge. So once again, at life highs, Persistent Systems, it's flat right now, taking a knock of less than 1% for now, but holding on to the kind of gains that it made yesterday. So we're actually looking at very opposing moves in the technology space at the moment. And the question really is, what do you do with this? Dharmesh, I come to you in this case. And I want to talk about the mid-cap space specifically. Names that you like and names that you would potentially want to avoid at this point.
We are avoiding the entire space. I mean, the kind of reaction market gave to Persistent or Coforge was, again, it was, I was surprised by that kind of a move because earnings were okay. I mean, they were not that great that 12%, 15% kind of a move should be done on stock price at the current valuation multiples. The valuations are rich everywhere. Across the board, there's no comfort on the valuation side. I think it's a scramble of tools of safety wherever, I mean, numbers are in line or slightly better than in line. people are shifting the allocation to that kind of a company, and that is why we are having such a diverse movement out there. KPIT, I mean, the management themselves told that one more quarter, they are not very sure how Q3 is going to pan out, and there may be further delays of the launches which are scheduled in Europe by their clients. So that is the reason why we are seeing such a big reaction happening out there. Birlasoft earnings were not that great, so that was bad. If you remove 2, 3 outliers in the mid-cap space, others are just in line or slightly less than in line. There is no aggressive takeaways. My only concern has been with the IT space, the valuation part, which still remains. And maybe after the US elections are through and more clarity is there on how the US and European part of the market is going to take shape based on their decisions, because much depends on who becomes the US president, whether it is inward looking or, democratically looking at the entire globe. Situations may change very dramatically for the IT companies. So we are just avoiding it. We are not taking any call on that space at all.
Okay. Well, in fact, we caught up with Sachin Tikekar. He's the president and joint managing director at KPIT Technologies to talk about their growth outlook for FY26. And he sounds very optimistic. Listen in.
I would say so. Because right now it's looking pretty solid. The pipeline is looking good. The conversations are really good. And we also believe that the OEMs have to make some of these important decisions. And I think they are looking to consolidate things, and they are looking for a partner to take up, larger chunks of business. So, we remain fairly optimistic about FY26.
Well, that was the management of KPIT Tech guiding about how optimistic he is for FY26. But moving on, more stock-specific actions. Sona BLW zooms after the company released its Q2 results, where it announced that it will acquire Escorts Kubota's railway business. And Puneet joins us with more details. Puneet, what do you have?
Well, thanks for that. So, a really strong quarter for Sona BLW, 17% of revenue growth, 14% EBITDA growth, while profits also grew by about 15%. EBITDA and profits coming bang in line with Bloomberg estimates. But of course, the talk of the particular quarter was the acquisition of the railway division of Escorts Kubota. So they've acquired this at an enterprise value of about 1,600 odd crores. While the Escorts railway division is a leading supplier of brakes as well as suspension systems, and that's a key metric because it's a 3-player market, and Escorts is the market leader with the other 2 being foreign players. So it's a definitely good entry point in this particular segment as well. Kubota's railway division did about 950 odd crores of revenue in the past fiscal year with EBIT margins of about 18.9%, and that's one of the major things because it's a very strong high margin business and which Sona BLW is acquiring. Because of that, they've also said that the proposed acquisition will be EPS accretive from the first year itself. They've also recently raised about 2,400 odd crores in this particular quarter, and Sona BLW has said that they'll be using this QIP proceeds for funding this acquisition, and any other needs will be met through internal accruals. So no debt at this particular point of time. Apart from the key highlights, they have an order book of 23,300, which is 7 times its FY24 revenue. But just wanted to highlight that what makes sense, why this acquisition makes sense for someone like a Sona BLW, as well as what it means for something like a Kubota as well. So for Escorts Kubota to sell a very profitable business, one of the key reasons is that railway business is a non-core asset for the company. And for Kubota, who acquired a majority stake in the company back in 2021, they hold now 53.3% stake. They would want to focus more on their traditional business as they do back in Japan as well, which is the farm equipment and the tractor space, and that's the reason they might have sold this business at this particular price point. The railway division also contributes just low single digit in terms of revenue when compared to the global revenues of Kubota. So that would be one of the rationale, but it's a very profitable acquisition for someone like a Sona BLW. For Sona specifically, Escorts railway division is the market leader that we spoke about. It's also a legacy business started back in 1991 and now has the #1 position in terms of market share. The acquisition also fits the growth strategy of the company. Basically, they want to just deepen their focus in mobility and not just stand on the auto side. So mobility via tractors and CVs will be one of the strategies that they had put out last year, and now implementing that via this acquisition as well. And global presence can be one of the things as well. So they can take this business globally as well with the same product portfolio. So overall, a big thumbs up for Sona BLW. We are seeing some pressure on the Escorts share price today, and that might be because this business had higher margins in the traditional business. But overall, for Sona BLW, a big thumbs up.
Right. Puneet, thank you so much for joining us and taking us through all those details. I want to take up and see a technical standpoint for Sona BLW. Now, what's happened is that firstly, in terms of volumes on an intraday basis, these are the highs that we've seen in over 1.5 years. But secondly, perhaps more importantly, Sona BLW currently is at about 740, 30 odd, 40 odd or something like that. 732 to be precise. It recently made a life high of about 760, 770. Its life high is about 840. For now, it's not too far away from the recently made high. And the question really is that, is it likely to see it make that new 52-week high now? Let me take this up with Rajesh. Rajesh, how are you looking at this sharp up move in today's day of trade? And do you think that the probability now increases for it to make a high? Under those circumstances, would you initiate a long after the kind of sharp up move that we've already seen today?
So after a correction of last 4 consecutive week, very strong pullback in the current week for the stock, and looking at the today's action, it clearly giving us some confidence that if the stocks continues to hold above 705 level, then yes, possibly stock may attempt to move further higher to the previous swing high of September 2024, which is placed at around 765, 768 kind of zone. So I think, yes, there is a possibility that, furthermore follow buying action towards 765 we can see in the near term perspective. But yes, if at all stock manages to surpass 765 level, then there is a high possibility that, stock may revisit its previous all-time high trajectory also. So at this juncture, 705 should be your stop loss to, buy the stock for near-term uptrend towards 765. And if it crosses, then you can carry your position for the next target towards 800 to 830.
Right, that's the view coming in, technical view coming in for Sona BLW. But let's take a quick break. On the other side, we'll get you top buy today, sell tomorrow picks, and latest from the derivative market. So stay tuned. Welcome back. You're watching India Market Close. Let's pull up the Nifty 50 and see where it's trading at, and then we'll address the Adani Total Gas results. It looks like a good day for Adani Total Gas, but before that, Nifty 50 is down around 0.08% as we speak. We're talking about Adani Total Gas. Margins are at 25.1% versus that of 25.9%. This is, of course, consolidated QOQ. Let's pull up the revenues and see. Net profit is up around 8%. This is QOQ, so it's good set of numbers for Adani Total Gas. Revenue is up 6% at 1219 crores. So, and the stock has also seen a significant spike since the results are announced. It's up around 5% as we speak. But another counter which is in focus today, and we also addressed it, in the start of the show. But more details on HUL. HUL has been seeing a lot of pressure in trade today, and this is a significant downfall for HUL in the past 4 years. In fact, this is the highest it's fallen in the past 4 years, down around 5.6%. And this is on the back of the Q2 earnings, where we saw revenue up around 2%. EBITDA was down. In fact, EBITDA was flat at 0.1%. Margins have taken a hit at 23.8% versus that of 24.3%. Net profit was down around 2.3%, and it has missed estimates. Although revenue was in line with the estimate, profits have missed estimates, and which is why HUL is seeing pressure. Well, a couple of things that the management said, which is also the reason why HUL is facing pressure, is that the urban demand looks subdued right now, and they don't expect recovery going forward for a few quarters as well. And they've said that the margins will remain within the same range as they are currently. In terms of the volume growth, the underlying volume growth was at 3%. Underlying sales growth was at 2%. In terms of gross margin, they've contracted by 140 basis points. This is, of course, on the back of raw material inflation. In terms of the segmental performance, home care business grew around 8%. Beauty and personal care grew around 7%, but the personal care business was down by 5%, and food and refreshment was also down by around 1.2%. So personal care and food and refreshment are the two segments which have gone down in terms of revenue as well as volumes, which have kind of impacted the overall top line of HUL. Now, a significant highlight which they gave along with the result was that the board has approved to separate the ice cream business, and ice cream business currently constitutes around 3% of the total revenue for HUL. It's a very high investment business as well as a low margin business, which is why they've planned to separate it. The management has said that they'll decide whether to demerge and list it separately or whether they want to sell it. This we'll know going forward in few quarters. Overall, management has said that the volume growth will surpass the value growth in coming quarters, and they might take low single digit price growth, that is price hikes. They've also taken price hikes in Q2. And management will also focus on volume-led growth, and rural recovery should continue to move ahead, is what the management has said. With that, Dharmesh, I'll come to you. Your view on how Q2 has panned out for HUL, and of course not just HUL, all the other FMCG companies have also kind of seen pressure. Let's say even Tata Consumer saw a degrowth in terms of volume. It was down by around 4%. Nestle also numbers were not very impressive. And today also we saw Colgate Palmolive also come out with the results which don't look very good. So your view on the entire FMCG packs, and of course if any stock that is on your radar.
Yeah, the entire space is under a bit of a pressure. It's just a relative slight pressure they are witnessing. And the problem area was the management commentaries by all. In fact, when they came out, they not only related to their space, but they also related to other consumer durable space and the stress which the general economy is facing. So that concerning statement, I think, has more to do with the stock price correction which has taken place today in HUL. Other than that, I think HUL has seen many seasons in India. I mean, I have 20 years I have been tracking this company. So there are many seasons which has come by and gone by. So I think any correction from here is a nice opportunity to again buy it. Be very clear that you are not buying this for 1 quarter or 2 quarters. You are buying this for a year's kind of a time horizon. Then the valuation and the cash flow which is there in the P&L of HUL is quite attractive, and upside can be around 2,900 to 3,000 kind of a stock price upside we are looking for 1 year's time perspective. So FMCG plays and seasons play a important role because that will also discount 1 year forward monsoon, which is there and the various crops. So, but I think at this valuation, it looks quite attractive. I would avoid Nestle for that matter. And maybe, I mean, Britannia is one other company where I would be looking forward to positively. ITC remains our all-time, portfolio buy because of the various levers the company has. And the entire business reorganization demerger is still to take place. So that value unlocking in ITC is pending. So these are the three companies which we are tracking closely, and buy on any decline is a clear strategy out there.
Okay, fine, fair enough. Your point taken. Along with that, let's also take up Laurus Labs' earnings. It does seem like it's a subdued set. We have actually the net profit has declined by 46%. That certainly is a troubling aspect. But what about your other operating metrics? We'll come to that. For now, it does seem like the earnings are not very encouraging for Laurus Labs, and we've seen that in that very sharp decline in the stocks. But with that, let's take up Hindalco. This is perhaps also one of the big movers in trade today. Even though we have seen a little bit of recovery from intraday lows, it's still down around 4%. Let's get in my colleague Mihika to tell us about what's gone wrong with Hindalco. Mihika, good afternoon.
Good afternoon, Agam. Yes, Hindalco has been under pressure since the start of the day. It actually hit an intraday low of over 7%, and this is because of weak Q3 results and negative commentary from Constellium, which is a Paris-based global manufacturer of aluminium products. Now, Constellium's shares tanked 28% overnight because their Q3 earnings did not meet the average analyst estimates, and they also gave weak demand commentary, especially for the auto and the specialty chemical segments, and they've said this for both European as well as US markets. Now, auto and specialty chemicals are around 38% and 17% of Constellium's overall operations. They've also said that they remain cautious heading into 2025 and are seeing no signs of near-term demand recovery. And when you talk about why this is important for Hindalco, well, Constellium is a global manufacturer of aluminium products. Hence, its observations give insight to the overall industry trends in the aluminium segment. And when you look at the revenue split for FY24 for Hindalco Industries, well, 18% of its total FY24 revenues actually came from its aluminium business. Around 61% came from Novelis, which is its international subsidiary that actually makes and recycles aluminium products as well. And the rest was the copper business. So it does could dampen and gives us an insight on how the demand could look for Hindalco's aluminium business. But there is some positive commentary in case of the packaging segment that Constellium gave, which is around 38% share for its operations. And when you look at how this is positive for Hindalco, well, most of its aluminium products, around 60% of it goes for the packaging segment. Even Novelis' Q1's shipments actually shot up to over 950 kilotons because of a strong demand for the beverage packaging segment. And the company's also stated that their FY25 aluminium flat roll product demand could, rise 5 to 7% on the back of various segments, especially packaging, construction, and auto.
All right, Mika, thank you so much for getting us those updates on Hindalco. Let me also take a technical check on Hindalco. Maybe I can take this up with Kush. Kush, what we're seeing right now is Hindalco coming off by quite a bit. But what's really interesting is on an intraday basis, volumes have been the highest in, nearly a month. But it's also moved up considerably on an intraday basis from its day's lows, which means that to a certain extent, perhaps heavy hands have bought into this counter. So interestingly poised, what would you do with Hindalco at this point in time?
I love how you're seeing the glass half full, Agam. Seeing the silver lining in this. The stock was already under pressure before this kind of move came about, right? It was holding just above the 50-day moving average today. It's broken below that. Even right now, despite the kind of recovery, it's still below that. I'll be a little skeptical on this because now the supply zone of 700, 710 might act as a near-term resistance for this one. And as I said, it's not that, the stock was trending up and then you've seen a gash lower. It was already trending down. So now if someone does want to perhaps, venture a trade, my suggestion would be to wait for this 710 resistance, this threshold to be taken out. Once that is done, the momentum will pick up again and, you could get moves all the way up until 735 and 750. So there's still, some money to be made on the way up. But that's once the 710, resistance is taken out. Up until then, there could be a possibility that the stock might consolidate, perhaps with some negative bias as well.
All right. Well, Rajesh, let me take up a similar stock with you, heavyweight, and that's, well, Hindustan Unilever. Most likely the same issue because we've seen this sharp decline, and this downtrend didn't start today. It has been on a downtrend for a while. How are you reading cues into Hindustan Unilever, and what would you do for an investor who already holds into this?
So I think the way stock has corrected throughout this month, almost 15.5% correction in the October month. Looking at the near-term, short-term structure, stock is now approaching towards its important and critical support area, which is placed at around 2450, 2400 kind of level. So I think those who are investor can hold on with the stop loss of 2400, some pullback or some relief we could see around those level for the stock. But again, on the higher side, 2750 is the key supply zone for the stock on the higher side. So I think it may consolidate for further more time as the stock has already corrected and the near-term structure is already turned on the weaker side. So for near-term to short-term, it may remain in the range of 2400 to 2700. Once the market stabilizes and some recovery comes in the broader market, I think there is a possibility that stock can also start some buying interest if it manages to cross about 2750 level. And if at all, if it's happened, then possible target on the longer term perspective, again, we can see towards 3000, but it may take time. So those who have little longer time horizon can buy this dip by around 2450, 2400 zone. That's the attractive level in this correction.
Right, that's the technical view coming in for HUL, but Westlife Food has come out with its Q2 earnings and the numbers really look disappointing. Revenues are flat, EBITDA down by around 22%, net profits are down by almost 98%, and margins have taken a significant hit from the 16% mark to 12.3% mark. Dharmesh, Westlife has been constantly posting, disappointing numbers. I think, okay, we have some technical difficulty with Dharmesh, but Kush, I'll come to you with this one. This stock has seen sharp decline since its result announcement, and it's down on 2% as we speak. Your view as to how it's looking on charts at present?
As you would guess, I mean, nothing encouraging at all. There has, as you rightly said, there have been these bouts of sharp corrections. The stocks try to recover, but hasn't really been able to sustain. Not gone anywhere for the most part of this year. So my suggestion would be to avoid this one. Not look for any kind of a quick trade on this one, despite the kind of down moves that we are seeing. If anyone's got this, then 770 is your level. That's where a decent support zone comes in on this one. If that is broken, then the stock could head lower all the way up until perhaps 720 kind of levels. So up until 770, you could hold on. The stock might consolidate, perhaps give a rebound. But if that is broken, then you're better off exiting this, the Westlife Food.
All right. Well, on that note, let's take a look at whether or not our experts have some buy today, sell today calls, or, well, let me revert it and say sell today, buy tomorrow calls. Rajesh, over to you.
Again, first stock, both stocks on the buy side only, and the first stock is Hindustan Zinc. After a consolidation of almost 8 weeks, now stock managed to be breakout of its falling trend line on a weekly chart, and the way stock has recovered after the consolidation, we believe that furthermore follow-up buying action we could see in the coming days for the Hindustan Zinc. So possible target towards 564. One can buy with stop loss of 535. And second stock is again on the buy side, that is Piramal Enterprises. This stock has shown very strong recovery from intraday low of around 990, and now stock is trading near to day high, which is at 1050 level. Looking at the near-term structure, we believe that the way stock has shown some strength from the today's low, there is a possibility that furthermore follow buying action we could see towards 1075 to 1085 for Piramal Enterprises. So here one can deploy some long trade for BTST point of view with stop loss of 1025.
All right. Kush, your ideas for now?
After a while, I have a BTST and not an STBT, perhaps, suggesting something about the underlying texture of the market, and that has to be on ICICI Prudential. The stock had a very tight range for the entire month, about 760 on the upside and 730 on the downside. We did see some volatility yesterday, but today it's been able to comfortably trade above that 760 resistance band on the back of fairly decent volumes. The momentum indicators also showing a pickup. I think this is a good candidate for a BTST trade. 780, 795 are your targets, and 750 is the stop loss. While we are at it, just a quick word on Tube Investments. When the show started, I suggested this as a positional long trade. The stock was down nearly 0.5%, almost about a percentage point. It's up nearly 2.5%. Almost about 2%. So there's a good up move on this one. The second target is 5050. So just putting it back on the radar, for your viewers.
All right. Well, there you have it. That's the view coming in on a handful of names. But maybe it's worth taking a look at the markets right now, and absolutely flat. So actually, everyone who would have potentially sold the 24,400 call and put earlier on the session are, laughing away to the bank. I know that these are such volatile markets, so there'll always be expectations of sharp spikes, and that will actually keep a lot of your sellers away. But for everyone who has had the courage to potentially sell that particular straddle, the 24,400 intraday straddle, given it is, of course, the weekly Nifty options expiry today, they're clearly making tons of money right now. And, only hoping that they had put some wings in place as well to hedge their bets just in case something went wrong. But all in all, sure, it's one of those days where it's been extremely sideways, and it does seem like the Nifty is going to end up somewhere around the 24,400 mark. Coming down to the Bank Nifty, I think a lot of that strength can be attributed essentially to HDFC Bank, because that's the bank which is in fact advancing and providing the bulk of the gains in today's day of trade. And of course, let's not forget, besides the HDFC, there's also SBI, which is now coming back to life and now starting to see a little bit of an up move too. I wonder if this in fact can be potentially be attributed to expected earnings that should come for you over the course of the next few days. But that's how things are looking, at least as far as SBI is concerned. Speaking of SBI, let's take this up on a technical basis too. Rajesh, anything that stands out for you in SBI?
I think underperformance is still there on the PSU Bank, and SBI is still, struggling to cross this 800-810 resistance area. Almost the stock is trading near to its 20-day moving average. So I think post-earning, if it crosses above 810, then there could be some short covering action we could see, as private banks are already moved up, but most of the PSU banks are still laggard in this rally. So if you're taking any long position, as the stock has already corrected in last couple of days, so your strict stop loss should be placed at around 778. This needs to be followed. If it's hold these stop loss and then some pullback towards 810 to 820, we could see in SBI.
All right, but let's shift focus to Syngene International. Now, they posted a muted set in Q2 with 2% dip in revenue and profit decline over 9%. We spoke to Jonathan Hunt, MD and CEO at Syngene International, where he talks about their quarter gone by and revenue target ahead. Listen in.
It is. I mean, actually, it's our guidance. So the market expectations are set in some ways with the outlook we gave at the beginning of the year. We thought overall it would be a year of growth. Said on a revenue line it would be high single digits to low double digits, but that it was very much a tale of two halves. First half would be muted, maybe even down a little bit. That's exactly how it's turned out. And that then implies that the second half sees quite a good return to growth throughout the second half of the year from revenue. And that then would also lead to some operating leverage and improvement in margins in the second half. And we saw that actually in the second quarter with the beginning of that operating leverage, 500 basis point improvement in the EBITDA line during the second quarter compared to where we were in the first quarter. And that looks set to continue into the second half. So there's some good growth expected. Got to go on and deliver and execute on it now.
That's the management of Syngene International. Kush, your view on Syngene International, how does it look on charts?
Well, for sure, near-term pressure, and today the moves that we are seeing, is coming off a bit of a consolidation that happened around the 830, 835 mark. But even now, if you see, there is a falling trendline resistance, and the high that the stock had made today, close to 895 levels, and hasn't been able to sustain that. So for me, though, that level around 900 remains crucial. If and when that is taken out, that's when you will see momentum pick up. That's when you will see a fresh uptrend sort of begin in this one. Up until then, I think this could consolidate with the kind of move that we are seeing today with some mild positive bias. So 900 is the key level to watch for. Any kind of fresh trades should be initiated once that level is crossed and you've got the closing above that level.
All right. Well, shifting focus to Fino payments, Q2 profit jumps around 8%, while margins see a slight contraction. Now, we spoke to Rishi Gupta, who's the MD and CEO of Fino Payments Bank, who talks about higher taxation as they expect steady growth in coming quarters. Listen in.
So taxation this year, looking at our past losses over there, this incidence was about 15% or so. But in quarter 3, quarter 4, we will have to pay full tax as per the calculation. So the tax outgo in quarter 3, quarter 4 will be higher. But because our growth is there, we continue to expect growth in H2 also. The tax amount, the total PBT will be higher, and that's what we need to look at, because tax is something which we were not paying earlier. Now we are started to pay, and because of which the PAT number will change, but the PBT number we expect that will continue to grow.
Right. Rajesh, I think the stock has taken a significant hit because of the profit numbers, but your view as to how Fino Payments exactly look on charts?
Well, stock was sideways, but after this fall now, stock has broken its consolidation range support area. So now if it's sustained below to 400 level, I think there would be further more follow-up selling we could see in the near term to short term perspective. So till stock not able to cross above 400 level, I think trend is slightly remain on the bearish side, and possible down move can extend towards 350 level also. So I think our view is looking at the structure, it's on the weaker side. 350 could be the next target for the stock.
Well, on that note, we thank both our experts, Rajesh and Kush, for joining us and taking us through their views on the several queries that we have raised with them. It does seem like it's going to be yet another very subdued close to the Nifty. We are looking at marginal cuts, bang in the middle of the mark of 24,400. Some concerns remain with respect to Nifty's near-term trend. The Bank Nifty is the one which is actually bucking the trend today. It's advancing by around 0.6%, 0.5% up move, a little over that at around 51,500. And a lot of that attributed to HDFC Bank and SBI Bank. But let's talk about the Nifty constituents. Let's get the heat map going and see how things are faring there. Of course, in terms of constituents, I've already mentioned HDFC Bank and SBI providing the bulk of their gains and what's weighing down on the indices at HUL, ITC and Hindalco. But let's take a look at the heat map. So we have a fairly evenly poised heat maps, about 50% gaining, 50% losing. Among the key gainers, Ultratech Cement, Shriram Finance and Titan standing out along with Grasim. What's weighing down on the indices, on the other hand, is names like HUL down 6%, SBI Life down 5%, Hindalco recovering from days lows, still well up, down around nearly 4%, and of course Nestle also looking at a cut around 3%. And in general, as far as the broader markets are concerned, let's take a look at the advanced decline ratio, and then of course I can get Mahima in to talk to us about your broader markets. Let's take a look at the advanced decline ratio and see how things are faring there. So there you have it. Today, declines once again tip advances. So you have about one gainer for two losers. But Mahima, how are broader markets looking?
So Agam, broader markets have been seeing pressure, but the pressure is not as much as they were seeing, in the past few days. But while the benchmarks, end flat, the small cap 250 is seeing cuts of about 1/5%, down around 0.5%. The mid cap 150 is also seeing pressure, down around by around 0.23%. So this is how the broader markets are faring. But let's also pull up the BSE 500 and see what are the counters which are kind of buzzing in trade today. Of course, Piramal Pharma once again leading the pack, up around 16% on the back of Q2 numbers. So Sona BLW on the back of Q2 numbers, as well as the acquiring of railway business from Escorts Kubota. Aster DM again on the back of Q2 numbers, up around 10%. Adani Total Gas has come up on the chart, up around 8% almost on the back of extremely good Q2 numbers. Adani Wilmar is also reacting well to its Q2 numbers, up around 5%. But some counters which are not doing very well is KPIT Tech, where the management has kind of lowered down their guidance. It's down around 13%. VIP has continued to see pressure in trade today, again on the back of Q2 numbers, and Dr. Lal Path is also seeing pressure after announcing its Q2 numbers. And of course, HUL has been the talk of the day and the stock of the day, down by around 5.8%. Agam.
Of course, HUL keeps the sector in focus because post-market we will have earnings from ITC and Godrej Consumer Products, and give us a better idea of how the entire sector has done. For now, of course, the cues are not very encouraging, but that's a wait and watch on that one. With that, it's a wrap on this edition of India Market Close, as well as the trading day. Tomorrow we move into Friday and see whether or not there is going to be some sort of short covering, which a lot of bulls are hoping for. But until then, it's goodbye from Mahima, me, and the entire team. Back in just a bit.
FMCG stocks crumble under pressure, slipped to over a 2-month low. This is after HUL dips almost 6% on the back of a weaker Q2 net profit. Adani Wilmar and Adani Total report second quarter earnings. Adani Wilmar's EBITDA sees 4 times increase with a margin expansion of 270 basis points. Adani Total reports a 6% increase in revenue and a contraction in margins. Over 40 flights across airlines received bomb threats today, either on social media or via calls. Airline teams are currently monitoring the situation. There's a new AI model in town and it's in Hindi. NVIDIA expands outreach as CEO Jensen Huang, during his visit, launches a Hindi AI model in India, says that it is the toughest regional language model area globally. Bhubaneswar and Kolkata airports suspended operations from 6 p.m. today up till 9 a.m. tomorrow as Cyclone Dana is set to hit the West Bengal and Odisha coast. Eastern Railway also cancelled more than 190 trains from 8 p.m. today. In a boost to the space sector, the Union Cabinet has approved setting up of a venture capital fund with corpus of 1,000 crore rupees for promoting startups in the field. Your festive shopping gets a tad more expensive. Gold and silver price cooled off after hitting fresh record highs earlier today, mostly driven by festive and wedding demand. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour of the show, we'll bring you the latest on markets as well as national and international news. Nifty and Sensex settled at over a 2-month low for a third consecutive session. Sectors traded mixed with FMCG dragging nearly 3%. Agam Vakil joins in with a wrap of all the market action.
Well, another subdued day of trade for the Indian markets with the Nifty looking at a cut of around 0.2%, marginally lower, but the Bank Nifty bucking the trend and advancing up by over 0.5%. And among those contributors, we have HDFC Bank as well as SBI. But let's take a look at the Nifty heat map and see how things have fared out there. So firstly, we have nearly one gainer for one loser on the Nifty 50. Advances for Ultratech Cement, Shriram Finance, along with Titan, Grasim and M&M. And on the losing end, a 6% cut for Hindustan Unilever, along with SBI Life and Hindalco. Also looking at a decline of 3.7%, which of course has also recovered from day's lows. When it comes to the advanced decline ratio overall, that's once again not very encouraging. The market breadth has seen one advance for 2 declines. And even if you consider the mid-cap and the small-cap indices, well, it does seem like we're looking at a little bit of an underperformance with respect to the benchmarks. A 0.25% cut for the mid-cap index, the small-cap index down around 0.6%. And even in terms of the key movers, the key gainers in the broader markets against the key losers, you do have likes of Piramal Pharma, Sona BLW, Aster DM advancing by 10 to 17% on an intraday basis. Adani Total and Adani Wilmar, where the earnings came in a little later on in the day, coming out with good earnings, with good reception as well. On the losing end, KPIT Tech, VIP, as well as Dr. Lal Path Labs, and of course, Hindustan Unilever, reacting to earnings. We continue to keep an eye on the FMCG pack, even as we are expecting earnings to come through. That said, we will be watching out for how things pan out and whether or not there is a bout of short covering in tomorrow's day of trade.
Very well, thank you for that, Agam. Earlier this morning, we spoke to Nissan Joseph of Metro Brands, and he shared insights on consumption demand in rural and urban areas. Take a look.
We don't look at it as urban versus rural because, the recovery was different if you go back post-COVID. What you're seeing post-COVID is a lumpy recovery, right? And in a good way, too. So we had a great year, the year after COVID, and everybody had a little bit of a challenge. So when it recovers and the economy tends to normalize, well, consumption tends to normalize, it's not a straight line recovery or normalization. It tends to be a little bit lumpy. What we're really happy about, though, is that the fact that two things. One is our Q2 numbers saw an improvement over our Q1 as far as, year-to-year growth. That's number one. Number two, we continue to maintain our profit percent, though we did not have the revenue growth, which shows that, there's some strong operational and financial discipline inside our organization.
FMCG stocks are under pressure as giants report weaker earnings. Today's trading session saw a mega sell-off for key FMCG stocks. Mahima joins in with a detailed report.
Well, a couple of FMCG companies have come out with Q2 earnings, and there are some commonalities amongst the commentary that the management has given in terms of these FMCG results. First up, the demand has been under pressure for urban areas especially. Rural recovery continues to outpace the urban demand is what the management said, but demand is also being impacted due to extended monsoons. Now, in terms of raw material pricing, raw material prices have inched up and gone up. Salt prices have significantly increased. Tea costs have gone up by 20 to 25%, and commodity prices remain elevated, especially for coffee and cocoa. Now, in terms of price hikes, the price hikes were announced for the companies in Q2 as well. But what the management has said that if the raw material prices remain elevated, then these price hikes might go further in few quarters as well. Now, to talk about company specific, HUL said HUL's gross margins for the quarter contracted by 140 basis points. They expect margin to remain in the same range, and company might take low single-digit price growth if raw material remains to be elevated. Their underlying volume growth stood at around 3%. In terms of Tata Consumer, the volumes declined by 4% due to weak demand, and they expect overall margins to stay flat or see slight improvement overall in FY25. Lastly, Nestle, the cost of raw material has gone up by 6% for the company, and EBITDA margins have taken a significant hit from a 24.3% mark to 22.9% mark. So all of these companies are facing pressure in terms of demand, plus raw material prices are elevated, which is kind of hurting the margins. So this is the overall view of how Q2 is panning out for the FMCG companies.
Thank you for giving us that overall view on the FMCG space, Mahima. Now, Adani total shares jumped over 7% on the back of a solid set of second quarter earnings. Revenue rose 6% from the previous quarter to 1,219 crore rupees, and net profit surged 8% to 1,886 crore rupees. Adani Wilmar reported a strong set of quarter-two earnings, defying the FMCG trend of weak numbers. EBITDA surged 4 times to 566 crore rupees, and margins expanded 270 basis points from 1.2% to 3.9%. Now, NVIDIA launched its Hindi language AI model in India at a 3-day AI summit that is underway in Mumbai. CEO of NVIDIA, Jensen Huang, delivered the keynote this morning, and NDTV Profits Rishabh Bhatnagar brings us the major highlights from the day.
For the NVIDIA AI Summit. Now, this is part of the several summits that NVIDIA holds across the world, and this started with the CEO, NVIDIA CEO Jensen Huang, sort of wooing Mumbai and talking about how important a hub Mumbai is for them. He said that Mumbai is central to global IT, and that IT industry is seeing a lot of shifts, seismic shifts as we expand. The major headline, of course, was the release of the small language model for Hindi, and while releasing that, he also added that Hindi is probably one of the toughest models for sort of mapping and creating an LLM out of. Apart from that, there were interesting partnerships that were announced by NVIDIA from giants like Reliance, Ola, TCS, all adopting Omniverse, which is another one of NVIDIA's platforms that's used for digital twinning. Apart from that, we had Tech Mahindra and NVIDIA also announce a center of excellence that will be set up as a joint venture. Huang was very, very bullish on India. He said that India's AI manufacturing ambitions should exist because India has long been a software exporter. Now it's time to export AI. It's time time to manufacture AI and then export that out of the country. Those were some of the few key takeaways that we had from day one of the NVIDIA AI Summit.
Thank you for that, Rishabh. Now, here's what NVIDIA CEO said about developing AI in Hindi at the NVIDIA AI Summit 2024 in Mumbai. Take a look.
We've worked with partners here in India to build the Hindi large language model. And Hindi large language model, as you know, there's 25 different formal languages here in India, with apparently a new dialect every 1,500 kilometers. And so you don't have to go very far before you need to train another model. And so here in India, if anybody, this is the hardest language model region in the world. And if anybody could do it, you can do it.
Now, speaking at the NVIDIA AI Summit 2024 in Mumbai, Jensen Huang compared the process of naming NVIDIA in 1993 to India's name.
In 1993, we had to come up with a name for our company, and the reason why we chose NVIDIA, I'll do the extreme short version. The reason why I chose NVIDIA in the end was because I really love NVIDIA sounds like a mystical place. And so yes, India, NVIDIA. And sounded like a great place. And so if it turns out that computer graphics and accelerated computing didn't work out for us, we could do almost anything.
Well, moving on, a big boost for space sector startups. Union Minister Ashwini Vaishnav, in his cabinet briefing, has approved 1,000 crore rupees of venture capital fund for space sector startups. The indicative investment range will be from 10 to 60 crore, and this fund is expected to drive innovation in satellite tech, launch vehicles, and space application. Along with that, the cabinet also approved of 2 railway projects worth 4,553 crore rupees for North Bihar and 2,245 crore rupees for Telangana's Amravati. A severe cyclonic storm, Dana, is expected to hit the eastern coast of India. It will affect West Bengal and Odisha the most. IMD has issued warnings for severe weather conditions with wind speeds reaching up to 120 km per hour. Bhubaneswar and Kolkata Airport have suspended operations from 6 p.m. today up till 9 a.m. tomorrow. Eastern Railways have also cancelled more than 190 trains from 8 p.m. We have Saurabh Gupta from NDTV to give us more details on the matter.
Cyclones in the Bay of Bengal, originating in the Bay of Bengal, is not a new phenomenon. It has been happening for years. And ever since the super cyclone of 1999, there has been an effort by the state governments of these states, especially states like Odisha and West Bengal, to try and minimize the impact and damage caused by cyclones. And there are 3 aspects to it. How do they do it? How have these governments, state governments, gained the expertise in managing cyclones? Because we've seen over the last few years, the number of people losing their lives due to these cyclones has been gradually decreasing, though the target remains 0 casualties. This time around 2. Several measures have been put in place to ensure that the impact of the cyclone is managed in an effective manner. Now, what are the 3 things that governments do? I'll go through them one by one. 1 is, of course, evacuation. 2 is cyclone shelters. And 3 is getting fishermen back from the sea to the safety of land. You can see, of course, as winds pick up, the first thing that governments do, these state governments do before a cyclone makes landfall, is evacuation. Evacuating people to safer areas so that these people who live sometimes in kacha homes or structures that are not very strong, so that they don't actually, lose their homes or lose their lives, these people are evacuated to safer areas. What are these safer areas? Well, in rural areas, the main stay of these safe homes is, of course, what is called cyclone shelters. And these cyclone shelters have been built in all these districts wherever these cyclones make landfall. And the coastal areas all have now cyclone shelters. These cyclone shelters are specifically designed to withstand high-speed winds. But not only that, they have facilities for, providing food and drinking water. But one important thing that often many cyclone shelters have built into their design element is also the fact that they have space for livestock and cattle. Because sometimes people don't want to leave their homes. If they have livestock, they want to lose all that. They consider them like family. So to bring the livestock and cattle along, these cyclone shelters also have those facilities. Apart from that, they have facilities for children, making sure they have milk, etc. All of those facilities, drinking water, medicines, all of that is provided at these cyclone shelters. The third thing, apart from evacuation and cyclone shelters, is getting fishermen back to land, because that's something that the Coast Guard is also involved in. This happens through, these mechanisms that the Indian Coast Guard has. They send out ships to sea, they flash these messages so that fishermen are alerted way in advance. They don't venture out into sea, they don't lose their lives in these cyclonic storms, and they're all in the safety of land. So these are the measures that these state governments take, and they've had success with these measures. Gradually, we've seen in the last few years, like I said, the casualties due to cyclones have come down, and it is because these state governments have these plans and they're ready to tackle the impact of cyclones that come. And even as we now prepare for Cyclone Dana, as you see overcast skies and the winds slowly picking up, these measures have already been put in place in districts of Odisha and also districts of West Bengal to ensure, at least target, that the cyclones have zero casualty.
Now let's take a look at what IMD Director Manorama Mohanty spoke about the path of the cyclone and its ferocity.
Today, if you see, a red alert is issued as we have issued yesterday as well. That is in Mayurbhanj, Baleshwar, Bhadrak, Kendrapada, Jajpur, Jagatsampur, Cuttack district, heavy to very heavy rainfall. At a few places with isolated extremely heavy rainfall, very likely. In these districts, and red color has been issued for these districts, and orange warning is issued for the district of Puri, Khordha, Nayagarh, Dhenkanal and Keonjhar district, where heavy to very heavy rainfall very likely to occur at a few places or isolated places. And also yellow warning is issued for the district of Sundargarh, Deogarh, Anugul, Baudh, Kandhamar and Ganjam district. For 25th also red alert is issued for the district of Mayurbhanj, Keonjhar, Baleshwar, Bhadrak, where heavy to very heavy rainfall very likely to occur at a few places with isolated heavy rainfall. And red alert has been given for this district, and orange color warning is given for the district of Jagatsampur, Kendrapada, Cuttack, Jajpur, Dhenkanal, Anugul, where heavy to very heavy rainfall very likely to occur at isolated places.
Over 40 flights across airlines received bomb threats today, either on social media or via calls. Goa International Airport and the Manohar International Airport were also put on high alert after 4 aircrafts bound for them received bomb threats. Airline teams are currently monitoring the situation. Aditya, explain us what's the chaos about.
Exactly. So the menace of hoax bomb threats continue, and this is not stopping. The tweets that are claiming that there are bombs placed in the flights are coming regularly, because of which the flight operations are getting disrupted. Now, today itself, more than 50 flights have gotten impacted by this, and according to our sources, nearly 20 Air India flights have gotten disrupted, and Indigo has confirmed 20 flights getting disrupted. Apart from that, our sources are also telling us that 13 of the Akasa flights have also gotten disrupted. Now, amid all of this, we need to look at what is at stake here. Our sources told NDTV a couple of days back that around 500 crores loss has been made by the entire aviation industry. Now, this loss has increased to over 600 crores. This loss is piling going up, and it will go further more, because when a flight lands, there is a lot of expense involved to it, which is landing charges, parking charges, and then the facilitations that are given to the flyers. Now all of this is not stopping, and the government is in action. All the security agencies are in action. Now we'll have to see that what steps the government takes here to curb this menace. Social media handles have also been warned against all of this, because a high-level meeting was held with X and Meta yesterday, where they were told that this issue cannot be tolerated and they have to take stringent actions upon this. So it's only a wait-and-watch game as of now. The flights continue to receive these bomb threats.
Well, thank you for explaining that to us, Aditya. Definitely a 600 crore rupees loss cannot be ignored. But moving on, the struggle to reach an agreement on the seat sharing for the Maharashtra Assembly elections continues between Mahayuti partners. Chief Minister Eknath Shinde's Shiv Sena and the Ajit Pawar-led Nationalist Congress Party (NCP) reached Delhi at Amit Shah's residence. My colleague Ashwarya joins with more details on this.
Well, the Mahayuti leaders were supposed to meet yesterday, but because of the unavailability of Maharashtra Chief Minister Eknath Shinde, this meeting got postponed, and now all the leaders of Mahayuti alliance had come together to meet at Home Minister Amit Shah's residence. It was first Devendra Fadnavis, later NCP's Ajit Pawar, Praful Patel, Sunil Tatkare, and from the Bharatiya Janata Party, Devendra Fadnavis and Chandrasekhar Bawankule, also Chief Minister Eknath Shinde, they all have arrived at Home Minister Amit Shah's residence just behind me, and this meeting has now started. Altogether, what we have been told is that the Bharatiya Janata Party wants a bigger fraction. As far as the BJP is concerned, they want to fight for at least 150 seats out of 288. Remember, BJP has already declared 99 candidates so far, and they want more 50 to 55 candidates to be declared specifically in the Mumbai and Mumbai suburban zone, but it is also NCP and Eknath Shinde, Shiv Sena, who's staking claim in this particular region, and therefore the reason perhaps to sort this out, a meeting had been called. Remember, today Sunil Tatkare, senior leader of the Mahayuti alliance, came out and stated that nothing of that sort as far as disagreement or not being very happy with the alliance partners is something that is absolutely fake speculations. They are going in one line, and therefore the reason perhaps today's meeting will decide rest of the 106 seats in all the zones of Maharashtra, and in upcoming 2 or 3 days the remaining seats will be declared by these three major political parties of the Mahayuti alliance. But remember, it is Eknath Shinde who wants a bigger fraction, and NCP's Ajit Pawar also wants at least 50 to 60 seats to be contested this time, but they have been reduced to 40 to 45. What happens next is something in this meeting that will come out.
Thank you for that. Now, in an exclusive to NDTV during a rally, Aditya Thackeray, leader of Shiv Sena UBT faction, talks about how their party has worked for lots of issues existing in Maharashtra and their plans for elections.
They have woken up in the past 1 month. If you see, we have been working on ground during our government and after our government. The BJP and Eknath Shinde have looted Maharashtra like never before and like never after. I think that is what Maharashtra has been seeing. Jobs have gone away, industries have gone away, farmer distress has its highest. This is what we are fighting against.
Aditya, Mr. Thackeray, yesterday MPA came up with this formula which is 85, 85, 85. Looks like there are disputes.
I haven't heard that as yet.
No, there was a press conference in which everybody sat down and said 85, 85, 85. But what about the remaining seats? Do you think there are certain disputes?
Today will be all good.
Well, gold prices hit an all-time high, yet the demand continues to grow. NDTV Profits Durva went on ground to get insights from buyers and sellers alike. Take a look.
With gold prices taking off this festive season, jewellery has become heavier for the pockets of Indian consumers. However, jewellery makers have found new ways to bring customers to their store by bringing in new schemes.
Dhanteras is in the offing, and this is considered by many as an auspicious time to buy gold. However, with current prices, consumers are having second thoughts. Gold has crossed 76,000 rupees per 10 grams, and this is weighing heavy on wallets.
What it was before and now, there is a lot of change in the price, so we don't feel like buying, what of our choice. Because of the scheme, I said let it be, at least the making will be like, because I was expecting the price will rise within a month only. From lower middle class to upper middle class, I think all will be impacted. It is predicted that it will go to 80,000, 1 lakh. So if it is that way, then I'm not going to buy. I'm going to say stop.
10 grams pay, it is really raised up to 25,000. So if I'm buying a 40 grams, so at least 1 lakh difference.
मैंने पिछले साल खरीदा था तो काफ़ी कम था. I think it was 55,000 कुछ का रेट था. अभी 71 हो गया है. तो पिछले साल जो मेरी स्कीम चालू रहती है हमेशा.
Some customers are pre-booking as there are no signs of gold prices cooling off. Schemes and discounts though are helping lure in customers.
Compared to last Diwali, there is a 25% increase in gold rate because this geopolitical tensions happening in Middle East, and also a lot of central banks in various countries are buying gold. So that is the reason for the increase in gold price as of now.
For most Indians, buying gold is not just a tradition but also an investment. Festivals are incomplete without jewelry. With the government reducing import duties on gold in this year's budget, consumers may still hope for some golden sheen this festive season.
And a quick programming alert for a deeper dive on this. Watch the big story at 6 p.m. today on what is driving gold and silver prices higher. Should you buy, sell, or hold? Well, but that's all the time we had on this edition of Profit 360. But stay tuned to NDTV Profit for more news and updates.
Check. Mr. Chatterjee, hi, can you hear me? Nupur
yes,
here.
I can.
Good to have you on the show, Mr. Chatterjee.
Thank you.
All right, we'll just begin in a minute. Guys, are you ready? Well, India is one of the prominent developing countries and emerging economies that have refrained from joining the International Center for Settlement of Investment Disputes, or ICSID, of the World Bank Group. Now, there is a growing chorus of voices that argue on the benefits of India joining it. So why has India abstained so far, and is it now time for a rethink? To answer that and more, we are now joined by Mr. Vinayak Chatterjee. He's the founder and managing trustee of the InfraVision Foundation. Good evening, Mr. Chatterjee. Thank you very much for taking the time to be with us. Mr. Chatterjee, to begin with, of course, India has decided to stay away from this grouping from its very inception. Tell us a bit more how you see this decision, and also give us some idea about the sphere of influence